No. Good evening, everybody. I'm not watching PSV. That's the one thing I would not be doing this evening. What's up, everybody? How's everyone doing? What's the score? Is PSV losing? Or is it Champions League? What's going on right now? Yeah. PSV is not even playing, man. Come on. What is this? It's all starting at 9. Good evening, everybody. And welcome back to Cilinix Crypto, and welcome to this live stream in which we will watch the FOMC meeting live together. I'll quickly wait. I'll quickly announce that I'm live everywhere. Is everyone's portfolio doing okay? It's tough times. It's tough markets right now. That's one thing that's for certain. Let me see. I'm just sending everywhere that I'm live. And we'll get going in a moment. The press conference is starting in 7 minutes, something like that. I missed some nice messages. I was not on the toilet. I wanted to start at 8:20, but you can only set the YouTube timer in 15 minutes 15 minute intervals, right? So I thought everybody has 5 minutes to kind of wait, get hyped for the stream, and now everybody's hyped, right? We're hyped for the FOMC. I think Jerome Powell is going to give us an amazing present this evening. And I'm tempted to buy Bitcoin here, but I won't. This afternoon I sent a long message. I sent a long message in the premium group that you have to take trading seriously if you actually want to make money. And buying Bitcoin right now is not taking crypto serious, of course. Let's see. No, Boris, I didn't buy anything. I still hold some. I still hold some things, but that's it. Yeah, it's very risky to buy right now, Field Art. I mean, if we together buy Bitcoin right now, look, that's a nice idea, right? Everybody opens a small positions of Bitcoin right now, and then we actually have some skin in the game. And then while we're watching, it's almost if you're betting on football. I'm not sure if anybody knows that feeling, but if you're betting on football, I mean, every football match is nice. Or is nice. I mean, every football stride. Every football game is more interesting if you have some money in it. Let's see. Yeah, we're live. All right. We'll start. Bitcoin is dumping a bit here. What's going on? I mean, look at the market. We're dropping down quite a bit. I quite like this. I mean, it's always like if you go into an FOMC meeting while the market is bullish, it's quite a meeting while the market is quite bearish. That makes me want to buy more. All right, I read an interesting article today on X, which I'll share. I think this is very interesting. I think in general this is also this is it. Like if you want to keep some hope that the bull market is still coming back, read this article. I would very much advise you to do so. I'll send it in the chat as well. Yeah, Bitcoin dominance is going higher. Yeah, probably. Wow. Yeah, Bitcoin dominance is absolutely skyrocketing right now. Not at the all-time highs, or all-time highs, not at the highs. But it's close to it. Well, it's getting it's getting a bit it's getting a bit sour out there in the markets. Not amazing. Yeah, FB, you just want to pump and dump a meme coin. We can do that, but I won't. I'll go to jail. Is my mic cutting off? How's my microphone? How's the sound, everybody? I thought the sound was fine, but my internet is not good. All right. Well, let me quickly change. Let me quickly do some things. How's the? Oh no. How's the microphone now? The internet is not strong enough. Sure, wait a minute. I'll fix it. I'll fix it. I mean, 50% of the people is saying that the mic is bad. 50% of the people are saying that the mic is good. So let me do some things. All right, we're back. It's good? It's good? Yeah, this is not a dump, Fury movie. I mean, basically nothing is going on. I mean, it looks like a bit of a dump. All right, I will buy some Bitcoin. I'll just do it. Why not? To have a little bit of skin in the game. Yeah. All right, opening a small Bitcoin position. Don't follow me, all right? Don't follow me, please. And we have to look up the Federal Reserve meeting as well. But the reason why I'm buying is that usually when you dump into an FOMC meeting, quite often it actually does reverse. So I'm not telling you that it's a good decision, but I just want to check it out. All right, what we're going to do is we're going to listen to the live stream. Hopefully you can hear it as well, and then I will turn off my mic, and you should be able to hear it. Let me see. Yeah. Black, font color, yellow. Font size, 150, 200, like this. Yeah, but it's not live yet. Is the audio still good? I can't hear it.
Good afternoon.
What's going on?
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments.
Okay, this is where I bought. I bought at this price.
For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance.
I will comment when he says something that's good or bad. So far, I kind of like what he's saying. The tone is pretty dovish, so that's good. But let's listen. If he says anything interesting, I'll let you know.
Light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the...
All right. Okay. It's difficult to say. So the interest rate decision is the same, but we're trying to kind of analyze what he will say about the next interest rate decision, which will be in March. And so far, I kind of like his tone. But it's also, I mean, it's the same shit he always says, right? Because he always says, we'll take a look at the economic data, and then based on the data, we will either cut rates or we will pause rates, and it's all about that. It's the same story. It's the same story every time. But you have to kind of listen to his tone, and I quite like his tone so far. But we'll get into the interview part in a moment. And that is going to be interesting, because in the interview part, sometimes he gives a little bit more information about what they actually think. I think so far it's neutral with a slight bullish bias I have. But all right, let's, okay, questions, they're going for the questions.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos,
Trump question.
From to Davos anyway,
Trump question.
The president said he'll demand that interest rates
Trump
drop
question.
immediately. So I guess I have a three-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if any, does a president making these kind of remarks have on policy?
This will be interesting.
Three questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Thank you.
Thanks.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And
yeah, the interest rate has stayed the same, but that was to be expected. That's not new.
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been.
I'm getting a little bit more bullish. I kind of like his tone. I might be biased. I want to be bullish on the markets. But I kind of like his tone. Wow, Bitcoin. Look at that. Look at that. Come on here. Up we go, baby. Dollar strength index dropping. I don't know. I'm not sure. I mean, yeah, it was kind of foolish what he said, because he said, to kind of summarize, or at least what I heard, is that he isn't necessarily looking for unemployment data to increase for the rates to be cut. And that's bullish, all right? Because very often what's said is that the unemployment needs to go up before they will cut rates. But now what it means is that there's a higher emphasis on the PCE price index and on the inflation rate. And that data has actually been pretty good over the last year in general. So therefore, relatively bullish.
It's not meant to send a
signal.
You
can see it from the markets.
Other than
look at the markets.
You can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
Let me take a look at the portfolio.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't.
Okay, guys, quickly. For everybody who followed my trade, I think our entry was around 101,800. Manage TP on your own. I'm going to move my stop loss to my entry. All right, I'm going to de-risk it, so that when it comes back to my entry, the trade closes. Because I don't want to take on too much risk. There's no need. The markets will be fine. There's no need to be very risky right now. If you took the trade with me, just de-risk it. Maybe take a small take profit. That's up to you.
Policies are actually going to be that you don't have a medium to long-term economic forecast that you can have confidence in, or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult.
It can go down, Daniel.
Beyond just
it can be very volatile.
So
it's better to be on the safe side.
In the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
Well, if I can follow up, the idea that you feel the economy that policy is restrictive.
No, my entry was more around.
The Fed in general wants
my
to
entry was a bit higher than
lower
101,000.
interest rates. So
higher.
when you look at the data that you are dependent on, are you looking for data
nice
that tell you that you can
Always
cut,
fun.
or data that will tell you should hold?
We're looking. It's more the way.
But like I said, if you were in the live stream when I bought Bitcoin and you followed me, which was not a wise decision, so shame on you.
That's what we do.
Right? Stop loss to entry.
Right now,
maybe
we feel like we're in a
profits.
very good place.
It depends on how much
Policy's
you
well
risk.
positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster.
You're not losing.
We could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Dollar strength index.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say.
Okay, this question doesn't really matter for us. Let's see. Okay, yeah, so the market so far, the markets are reacting pretty good. We'll tune in with the next question. No, markets are pretty good. I mean, Bitcoin is moving up quite nicely. I think from our entry, my entry was more towards 102,000. So my entry was a bit higher than this. I think it was something like this. So from my entry price is up 1.8%. It's a very small move. 1.8% is not going to pay the bills, but I went in with quite a bit. But no, dollar strength index so far is a little bearish. Stock markets are slightly bullish here. As you can see, the S&P 500 is quite strong. What more? Altcoins. Yeah, I mean, you can see the entire market is kind of moving together, right? So there's not that many altcoins moving, not that many altcoins outperforming. Like Athena is quite strong, WIF is quite strong, Fetch is quite strong. The Bitcoin dominance is coming down a bit, so that's good. I like that. I like that a lot. But we'll see. We'll keep an eye on this. I mean, right now everything is looking pretty good. Dollar strength index dropping down still. Bitcoin volatile to say the least.
You know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see their alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now but always. And it's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it was changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see
XRP is just following
owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now.
Just following the market.
That's the place where most of the remaining gap is. In addition,
markets are just the entire market is just correlated. I mean, you can see altcoins right here. I mean, all altcoins right now are moving together. Sure, one altcoin is a little bit stronger than the other, but most of the altcoins are just moving together. And I think the immigrant answer was neutral. I don't think the market really has an opinion on that. Our goal is 2%,
and we do mean to get
because
back to sustainable 2%.
He didn't really say anything.
And in terms of the labor market, I mean, how is that broadly? You said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that?
Bullish.
There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment. With the unemployment rate, employment participation,
I saw this,
wages. Job quits, are people quitting, that kind of thing. The ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?"
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if
I did a full video on XRP. Oh, no ads on my live stream. What are we doing? I'm not getting paid for this. I did a full video on this. If you look up a realistic price prediction for XRP, this bull market, I did a video in the 5th of December. Fans in the class. I did a video then talking about where can we actually go in the bull market and in the next couple of months. And so far, we've gone the right direction. But so if you're interested in that, check that out.
To reduce the federal workforce, I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press.
All right. I don't think we're going to hear anything new in the press conference. Now the big question is, so in general, if you're tuning in a little bit later and you want a rundown on what's going on in the markets and what happened, first of all, the Federal Reserve interest rate decision was at a range from 4.25% to 4.5%. It stayed the same. All right. So the interest rate decision is still the same. Then we watched the press conference afterwards. I personally found that he had a little bit more of a dovish tone, which is bullish, all right? Because you want the Federal Reserve to kind of pull back the restrictions, bring back down the interest rate decision, so that so that the markets can go up, so that our crypto can go up. I thought it was pretty bullish and pretty dovish. But in the end, the main thing that matters is the following, and that is, what does the market think? And so far, it seems like the market is reacting relatively positive to the news. And if we look at some fundamental data, what we can see is that the dollar strength index also dropped down quite a bit. Stock markets are doing fine right now. Volatility index is down, which is also a good thing in these circumstances, I would say. So far, I'm pretty bullish. Now, I'm not sure if the probabilities have actually changed for March. Wow, for March, okay, this is bearish. So we have to talk about this. But so these are the probabilities, right? So this is what the CME thinks of the following interest rate decision, which is in March. And this afternoon, the probability of getting a rate cut in March was higher. It has decreased, which is slightly bearish. So that is something we have to be careful about. And we'll get into some questions in a moment So if you have a question, fire it off, and I'll try to answer. I'll try to answer a couple of videos before ending the stream. But in general, I want to warn you. All right, FOMC interest rate decisions, etc., can be extremely volatile. In the sense that what can happen in terms of price action is that we shoot all the way up to 105,000 and that we shoot all the way down. And I'm not exaggerating, all right? We can do an entire move up and we can reverse it in 2 hours afterwards. So be careful. It's probably better for most of us to not trade this evening and wait for tomorrow. Wait for tomorrow after after the dust has settled, after the volume has come in. And honestly, if Bitcoin tomorrow morning is still holding on top of this level at 101,000, regardless of what has been said this evening, I think we're going up to 107,000. That's where we have the value area high. That's kind of the top of the range. So yeah, in general, because of the fundamentals we've heard, because of the press conference, and because of the technical structure right here for Bitcoin, yes, I am slightly bullish. I don't think, however, we can break out. I don't think it was bullish enough for that. So ultimately, what I think is that, well, short term is most likely to be bullish, but that after that we will drop back down, and that we need something bigger to really create the bullish breakout. But if the Bitcoin dominance keeps falling, which I hoped it was falling a little bit more, if the Bitcoin dominance keeps falling, we could actually have some bullish altcoins. But that is something we'll have to watch. Let's take a look at some questions right now. XRP is not doing any. Look, XRP, I know a lot of you are interested in XRP. I don't think XRP is going to do anything. All right, XRP is very comfortably in its range right now. And this interest rate decision is absolutely no reason why XRP would break out. All right, so going higher, moving up together with Bitcoin, I do expect. But breaking out, which is ultimately what we want to see with XRP, I don't expect that, honestly, which is a little bit boring, but that is true. Let's see. No, I mean, at the current rates, I would not open a position. If you open the position with us at the start of the stream, then great. But I mean, right now, look, for most of us, it's just not the best decision to enter anything. Field Arts, if you want to join the premium group in Discord, there's a channel called Signals Entry. There's instructions, but if you join the Telegram server, the Telegram community, which I think there's a link to that down in the description as well. If you go there, if you go to our free Telegram group, and if you go to the bio of the group, you can see a link there as well. Or just go to cilinix.com. All right, if you go to cilinix.com, that might be the most the easiest way to get in. But that's up to you. I'll post a link down. I'll post a link in the chat, but. Feel no need to subscribe. I mean, if you want to, great. If you don't want to, then that's fine too. Cloud9, yes, I think Kaspa will do well. If we have an alt season, I'm almost 100% certain that Kaspa will have its moment as well. I mean, wasn't it like 2 weeks ago that Kaspa was also very strong? I think it's a decent altcoin, and it has an amazing community and probably a good market maker behind it as well. So yeah. Yeah, XCN, but is XCN pumping right now? It's doing pretty good. So this is Onyx. Yeah, Onyx looks decent. If we're holding 3.3 cents, we'll probably get into this level at 4 cents. But it's a bit like if you're buying right now, the risk reward is not amazing. Yeah, Jupiter. I'm very bullish on Jupiter. I think Jupiter is undervalued. I think ultimately, look, Jupiter right now is in this range. If we still get somewhat of an altcoin season, I think Jupiter is going to break the range. I'm a huge fan of what they're doing, and the updates and the news we had on that. H-bar, let's take a look at Hedera. Hedera is not really doing anything. Hedera, I'm not too. I don't know. I think Hedera will just kind of do something like this. I'm not too like there's no real momentum for HBAR right now, unfortunately. So my last video is also still updated on this, by the way. The last Hedera video I made is still valid, and what we talked about there is still going on right now. Dogecoin. Dogecoin, same thing. I mean, this is the analysis on Dogecoin I made this morning. Still valid, all right? Nothing has really changed. I mean, Dogecoin, there's nothing really moving Dogecoin a lot right now, I think. Check XRP. I just did. Nothing changed. Nothing changed. Yeah, Fabrizio, you could be right. You could be right. I don't know. What did XRP? XRP did nothing. There's nothing going on with XRP, everybody. Get off those low time frames. Please. There's a lot of messages coming in. Guys, I'm missing half of the messages. I'm sorry. I want to answer all of them, but it's going to be hard. Sui at this point of time looks bearish. Personally, I have a price alert at $4. If we break above $4, I'll buy. But it's not looking good right now. I mean, you can just see it on the chart, right? It's flipping. So we either get a very bullish reclaim very soon, or this is turning bearish and we'll drop down into this level at $3. Guys, if you're going to spam, I'm not going to cover that coin. Come on now. All right, guys, we're going to end the stream. I cannot keep up. I can't keep up. To do a bit of a summary, be careful with Bitcoin. All right, like I said, as long as we're holding this level right here at 101,000 tomorrow morning, we're fine. And I think Bitcoin actually looks quite good to go higher. But ultimately, I mean, if you want to trade altcoins, if you want to buy altcoins, keep an eye on the Bitcoin dominance. Because if the Bitcoin dominance stays strong like it is right now, altcoins are not going to move up much, even if Bitcoin goes all the way up to 107,000. So be aware of that. And at this point of time, there's also not that many altcoins that I'm very, very interested in. I think XRP is still fine. I think Solana is still fine. But like I said, Sui still has quite a big level to break through. I think Jupiter is still fine. I think Ondo is still fine. Ondo is quite strong. I think Litecoin is still fine. I think BitTensor or Tau is still fine. And what I mean with fine is that they will probably move up together with Bitcoin if Bitcoin turns bullish. Outside of that, it's a tough market to trade. So better to stay safe. I will be back tomorrow morning. I want to thank you all very much, sincerely, for watching this stream. I thought we had a good stream. Hopefully it was valuable for all of you. Laura, I think that's bullish, but I'm not about the Czech National Bank. Last thing, because I did think it was interesting. I think it's good, but first it needs to be accepted, and then we kind of need to see whether it's going to be a ripple effect, right? So if other countries are going to do something similar. And I am 9. I'm not German. I'm Dutch. All right, everybody. No, Servus. I'm not German. I might look German, but I'm not German. I'm Dutch. Everybody, thank you. Hopefully the stream was valuable. Also, for those who are watching this one day after, I will see you all hopefully in my next videos tomorrow. We got the same schedule going on tomorrow, so hopefully I'll see you there. And for now, everybody, have a great evening. Take care and stay